Hey everyone, welcome to video number 4. And this is going to be about the pieces of delivery. So market phases and the order of delivery. So the order of delivery is based off of timed functions of the algorithm, like we learned in the last video, and it has an order to it. So everything starts with an accumulation or a consolidation. The market must start there because that's a price discovery phase where buyers and sellers are auctioning around fair valuation to figure out where the best price levels are to move down, up, sideways, whatever it is. Everything starts from an accumulation. So, an accumulation can look a few different ways. Um, what we are probably most familiar with is candlesticks moving up and down like this, being in a tight range. That is a form of an accumulation. So this range before 8 a.m. can be considered an accumulation. So accumulations are all timed ranges. They begin and they end just like everything else in the market. Every expansion's timed, reversal, all that stuff. So accumulation 1 is here. Another form of an accumulation can be one candle. So if we have a large candle that has multiple candles inside of it, and we are failing to expand below the high and the low of that candle, this is your accumulation candle. The high, the low, and the equilibrium is what we focus on. Talk a little bit more about that when we go over ranges. Every candlestick, every consolidation, it's all ranges of price. The high, low, and the equilibrium are always going to be important. This is also how we can frame trades. If we're failing to close below and stay below the low of this large candle, and we're closing back inside, then most likely we're going to take the other side of that candle. Again, we'll go over that more a little bit later. What I want you to see is the different forms of accumulation, because this is where the order of delivery is going to start, always. So the second phase is going to be the OLR, which stands for opposing liquidity run, or stop hunt is pretty common. And this can be the catalyst to a reversal. So opposing liquidity run, what does that mean? Well, if we're bullish in the market, like today, and we have a key level up here, in order for the market to go up, it needs to come out of an accumulation and pair orders to the downside. We have to pair sell orders to buy, and we pair buy orders to sell. So if the target is up here, the opposing liquidity would be sell side. Target is buy side. Opposing liquidity run is to the downside. This is a necessary part of market movement. So OLR, stop hunt, revert can be the catalyst to a reversal. This is also manipulation. In the AMD fractal, accumulation, manipulation, and then we distribute above the high of the original accumulation to our target. But the OLR, or the manipulation leg, any way you want to call it, this is the second phase in the order of delivery. When we run into most likely a higher time frame key level or a higher time frame liquidity pool, that's where reversals can happen. As long as we have a bullish target, we can trust this fractal forming a reversal around a key level. The next video we'll go over key levels and how to read them. But the important part is reversals are going to happen at higher time frame key levels or liquidity pools. So highs and lows, daily highs and lows, weekly highs and lows, session highs and lows, different things like that. But that is the next phase. After that, we need to confirm our direction. So if we're going to go bullish, we need to know when it's permitted. So MSS or market structure shift, which causes the initial expansion in the order of delivery, is next. And that's this leg right here. So when we're closing above down candles highs, which confirms bullish order flow, and we have gaps or inefficiencies being closed in, that can be a sign of a market structure shift. We need this to confirm our direction that says, okay, from here, we're confirmed bullish. All I need to do is wait for an entry, and then we can get to my target. So order of delivery, accumulation, manipulation, reversal, expansion. After that, we have our retracement. Retracement is to get us back into fair valuation to then buy with the market makers. When the market makers or the institutions buy, they buy at a discounted price and they sell at a premium price. So, how do we find that? The initial expansion leg, fair valuation is always going to be at the equilibrium or 50% of the expansion. So we at least need to get back to fair valuation to then start looking for where we can buy. Inside here, we have failure swing. We understand that the market buys sell side liquidity. So anywhere inside here could be your entry. We'll be going over that more in later videos. But the important part here is retracements will look for fair value, whether it be buying or selling. In this case, since we're confirmed bullish, we're looking for fair value for buying, which is in a discounted zone inside of key levels and liquidity that we're going to get very familiar with to then bring us higher. The next part is the secondary expansion, which is all this to finish this leg. So this fractal now starts to become a little more familiar. Each piece is a necessary piece to move the market and book it up or down. So accumulation, OLR, market structure shift, retracement, expansion. Order of delivery simplified, buy side, sell side, retracement, expand, sell side, buy side, retracement, expand. So if we're going down, we need to take buy side first, buy side in the form of that high, sell side in the form of this low, retrace to fair valuation, and drop. If we want to go up, we take sell side in the form of this low, buy side in the form of this high, retracement, and then we expand. This is the order of delivery that the market runs on. It's not going to look exactly like this every single time. There are different variations and fractals around it that you'll see while you're studying. A lot of them I can go over, but based off of the understanding, you're going to be able to read it no matter what. So there's times where it will leave a high here. This doesn't make it down to fair valuation, fakes a move bullish, then comes down to fair valuation and goes up. The point here is we need to follow the steps. We need to get back down to fair valuation or a discounted portion of this leg to then take a buy. All this is manipulation, inducement, the market trying to get people in early, take them, the sellers out, buyers out. They're going to do that many times, but we're going to teach you what key levels to focus on inside of here so that you won't get tripped up. So as far as this lesson goes, an assignment for you would be to find this fractal on any time frame, mark out an accumulation, mark out the OLR, the market structure shift, retracement, expansion, and start getting familiar with each individual leg of this process and how it works. Going on to different time frames, you're going to see this fractal over and over again. It's going to be burned into your brain. We just need to know when to trust it and when to not. So right off the bat, we see this. This stuff continues here. So we've got an accumulation, OLR, market structure shift, retracement, expansion. The order of delivery is happening everywhere. Once you're versed with key levels, we're going to be taking these trades when they're at your key levels, not in random places. So when we have different types of key levels that we're going to go over, like a directional gap or a breakaway gap, the equilibrium, when this fractal is happening around a key level, it's high probability. Low created right above the equilibrium, which is our key level, OLR, expansion, retracement, expansion. It's going to form as long as you have your confirmation of direction and your target, and we're going that way, it will form in your direction. So go through the charts, get familiar with this type of fractal, the way it moves, and then we're going to break down the pieces even more and where you can find key levels to buy and sell. This is the understanding that you can buy here, sell here, buy here, all that. Because if you understand up here that you're in the retracement leg of this fractal, then you can sell down to fair valuation to then buy to continue the fractal. If you understand this is the stop hunt, then you can get in here. So I'll teach you all of that as well. But this is the main thing. This is how you go from a pattern trader to an understanding. So we understand what we want to see where and why. So I think that's all I wanted to go over in this one. Yep, we're going to move into key levels next. So go through the assignment and go through the videos as much as you need and then ask questions. So see you in the next one.